Joining me now is Richard Williams, Executive Chair of Bunker Hill Mining. Great to see you, sir. Thanks for coming in.
Thank you very much for having me.
Let's start with an overview, if you could, of the past producing Bunker Hill mine in Idaho. It's silver, zinc, lead, and you hope to be in operation later this year.
Well, to be accurate, we hope to be in operation in the early part of next year.
Okay.
But the history is interesting. Bunker Hill mine ran, and along with its smelting operation, for just short of 100 years, having started in the 1890s, and was shut in 1981 because the smelter, in particular, couldn't keep up with the environmental regulations, the good environmental regulations that were passed in the United States in the 1970s. The Clean Air Act, the Clean Water Act, and the Environmental Protection Act, the majority of which were under the Republican Richard Nixon, by the way. And so it was shut and then became an environmental cleanup site known as a Superfund site. They're quite well known in the US. And everything was completely dismantled that could be dismantled. So the smelter was removed, the surface facilities were removed, the underground mine flooded up to a certain point. A water treatment facility was put in place to ensure that the acid mine drainage was dealt with. And the mine and the community around it sort of collapsed. You know, nearly 20,000 people in that community was then shrunk down to 2,500, and then ended up being one of the most impoverished counties in the United States of America. Now that was just part of, well, it was one example of many things that happened to American mining in the 1980s, where environmental regulations tightened, hard rock mining contracted, but for American industry they then bought their metal from overseas, which is something we might return to later on here as a challenge when you've got competitive supply chains. So it remained fallow. It was handed over from party to party to party, and we got involved 5 years ago with the option to buy it from a group of Idaho fellows called Placer Mining Corporation that were very keen to get the mine going again. They hadn't paid their water treatment bills to the Environmental Protection Agency, and so they owed money to them back then, around about $19 million. They didn't have any conventional resources or reserves to 43101 standard, and they had no money. But it was sitting, option to buy it was sitting in a listed mining company called Bunker Hill Mining Corporation, listed here in the CSE in Toronto and in the over-counter exchange in New York. And a group of us who'd worked together at Barrick Gold, engineers, geologists, metallurgists, in my case I was chief operating officer, said, gee, if we could get this mine back into production, this could be the start of a new American mining company, where we generate American mining jobs, providing American metal to a North American supply chain, and be the first mining operation to start in an environmental cleanup site at a time when regeneration is really valued by everybody, not just the market. And so we've raised money along the way, in different forms of money at different times. And there are other elements to it, but we brought Tech Resources in as a partner, having bought their closed milling facility that was sitting in Pend Oreille in Washington State, dismantled that, moved it to site, in the process of upgrading it right now. And our plan, as I said, slightly later than I wanted, is to be in production at 1,800 tons a day, producing two concentrates, a zinc concentrate and a lead silver concentrate that will go to Teck's Trail smelter, which is 300 kilometers away, which in global metal supply chain is just next door in British Columbia, just across the American border. Generating or creating 250 long life jobs in a community that needs it, and doing it using, within what's affordable, the most modern mining methods to ensure, God willing, that we're as safe and as sustainable as any mining company can be. So it's a turnaround story with a group of people that I'm proud to call colleagues and friends who've taken on an incredibly difficult challenge and right now are continually seeking support from the market for the delivery of that purpose.
That's fascinating. Now,
Thank you.
you said, Richard, that about 75% of the property is unexplored,
Yeah.
and that over time there's the potential to maybe double the life of the mine. The team has also discovered 2 large near-surface anomalies, and then you've got bonanza grade. We love the word bonanza grade silver adjacent to the existing mine. So can you tell us a little bit
Sure.
more about that?
Sure. Yeah, the mine is located in the Silver Valley, Idaho. And just in the Silver Valley, just to zone people into, if they don't know, some of the other operations there. Heckler's very large underground silver business called Lucky Friday is just about 15 miles away from us. Then you've got USA Silver's Galena mine. You've got Tom Kaplan or Electrum's Sunshine mine that they're planning to bring back into production, the other side of the feasibility study being completed and refinanced. And there are a number of other smaller mines. The Silver Valley, Idaho produced 1.3 billion ounces of silver in its time, which over a concentrated period is one of the richest silver areas in the country. Now, the mineralization in the Silver Valley is what makes it really interesting. There are 3 basic, and again, for the Silver Valley geologists, they will hopefully excuse me for simplifying things, but I'm not a geologist, so I'll simplify it. There are 3 mineralizations, one of which is tetrahedrite, which is silver copper sulfide, very, very high grade indeed. You know, if you get hold of tetrahedrite, your silver grades are 45 ounce a ton or more, and so on. Then you have the argentiferous galena, and these things tend to intersect the way it all works out. Where again grades are from 7 to 10 ounce all the way up to 40 ounce depending on how it is, and that comes with a lot of lead. And then you have the zinc sulfides, the sphaerolite, which has got a limited amount of silver but a lot of zinc, and coming with all these things is lead. And in Bunker Hill we have primarily sphaerolite, which is the zinc sulfides spread over quite large disseminated zones up to 150 foot wide, very amenable to relatively speaking bulk underground mining methods, low cost methods, which is what we'll use. And then we have argentiferous galena. And where these things intersect, you end up with hybrid zones, where you end up with a greater concentration of lead, zinc and silver. And so coming into Bunker Hill, we're here to restart the mine. And so to be as efficient as possible, we're going to restart the mine using the reserves that were left behind when the mine got shut in the 1980s. And really what they had was just over 10 million tons of reserves, which were primarily in the zinc sulfide mineralization, so primarily zinc and lead with some silver, about a 70%, 30% split. Historically, the mine was 50% silver, 50% base metals. But this particular block of ore, if we call it that, it's not quite, again, I'm abusing terms, not quite that, it is primarily in that zinc side, which gets us going. And by our estimates, there's at least 13 to 14 years worth of life there. That isn't our PFS. Our PFS gives us 5 years, but I'm telling you what we see and what our financiers see. And that's interesting enough. That will give us a sort of 60 on conservative metal prices, sub-consensus metal prices, $60 million a year EBITDA and $25 million a year of cash flow. It's a good, solid business. But we're interested in a bigger business. And where, like the old Bunker Hill gave us a bigger business, is when they can bring more of that silver mineralization into the mine plan. And so when you refer to bonanza grade in Bunker Hill, it's the higher grade galena veins alongside the sphaerolite that we want to bring in. And we found, because we went through all the old data this year and last year, a series of drill holes that are near to where we're going to be mining of a galena vein where the intersections are of 20 ounce a ton over 5 foot. And we think that this is conceptual. We have to do the drilling, we have to do the work. We think that actually we could bring a couple of million ounces of silver into the 2026 mine plan if we get drilling now. And so as soon as we finish this financing, we're going to get drilling now. And on the assumption that concept is true, we'll bring more silver into the mine plan. So your question was about the potential. The first potential is all of the veins that are sitting there in this very complex mineralized area. We're going to be wanting to bring in the highest margin ore bodies as possible. And there are many of those. The second thing is, as you said, 75% of our very large claim package has not been explored at all. And that's because when Noah Kellogg, who found this thing, or his jackass, actually, to be accurate, when wandering around looking for something to eat, found the outcropping, what was then a sphaerolite vein, back in the 1893, they just started mining there. And the mineralization was so rich, they just mined, and they did some exploration, but in the main, exploration was done by mining. And there are 200 miles of underground tunnels here. This thing went on for a long time in a long place, but very limited amount of detailed strategic exploration. And we discovered when the mine was closing that they started to do strategic exploration. So that's given us a number of our targets that we want to get into. Some of them are below the water table, and we'll dewater the mine. Some of them are in the upper part of the mine. But the other thing we did is we did a geophysical survey, which was not, because technology wasn't available in those days, available to our predecessors. And that's discovered a number of anomalies. Now, an anomaly is an idea. Converting an idea into an ore body is quite a lot of work and confirmation, but the size of those anomalies could be as large as the mineralization that we're mining here now, which, as I said, is in the 10 to 14 million ton bracket. So if any of those anomalies turn out, and there are 4 of them, turn out to be as exciting as we think they are, you could end up with 4, 5 times the potential of what we've got now. And we think that is just the start of it. Our view of Bunker Hill is this is a multi-decade mine to be proven, and everything I've said is dependent on the right work happening and the right geology and mineralization being exposed. But we see Bunker Hill as not just a small 50 million a year, 60 million a year EBITDA, very healthy $250 million valuation company, but something that's potentially much bigger because it's in this remarkable area, the Silver Valley, and our geologists and engineers who are looking at this, because finding something and converting it into a mine requires all skills, are very excited by this possibility. We just need the money to get the mine started and then reinvest the cash flow into exploration and start unlocking it. So thanks for asking the question, because Bunker's a sort of turnaround restart story, but that's just phase 1 on a journey to being a much bigger, longer life mine, which again comes down to money. We want to show.
And your financial backers obviously believe, you touched on that a little bit, you recently struck what you call transformational arrangements with Tech Resources, Sprott Streaming and Royalty, Monetary Metals.
Yeah.
So can you give us more detail as to the funding and what this allows the company to do and how it improves the balance sheet and helps with just financial flexibility?
Yeah, thank you. We to give you a little bit of the history of the last sort of 5 years, we've been financing the development of this mine, unfortunately, with less equity than we'd like. The equity markets for what has been seen to be a base metal restart project, an environmental cleanup site of this scale, have been very, very lean. I mean, they've been lean, period, for the mining industry. COVID hasn't helped, and a whole bunch of other things help. So it's been very hard for us to get equity, and we have some long-suffering equity holders. Tech Resources became an equity holder when we bought their Ponderay mine, and we paid for it in equity. So they're around about a 7% shareholder now, and have been bouncing around between 7 to 10% in the various things that we've done. But like a lot of junior developers, we had to go outside the equity market, so we went to Sprott Streaming and Royalty business run by Caroline Donnelly and Mike Harrison, who provided us a royalty and a stream and then various other debt instruments and so on and so forth, to the point at which they knew and we knew that we had probably too much debt, no, not probably, certainly too much debt in our balance sheet for this asset to go into production with the right risk profile. So in around about November last year, dealing with a reality that every developer over the last 2 years has faced, which is ridiculously high inflation in the United States, brought on primarily as a result of printing money during COVID, but there have been other factors. We had to sort of say, gee, we're not going to get to the finishing line with the money we've got. We need more money. Our estimate back then was around about $30 million. And so we went to, as is always the way, our two strategic partners, Teck and Sprott. Now, Teck's a strategic partner for us because they want our concentrate to go to their smelter in Trail. Trail needs lots of feed, and North American high-quality feed, low-impurity feed is valuable to them. And they said, yeah, well, let's see what we can do to help. And they had a look at the balance sheet. We looked at the balance sheet. We all sat down around a table effectively and said, gee, we're really keen in getting this mine into production, but we need some changes. We need to bring more equity into the business, and we need to reduce the amount of debt. And the non-equity facilities we've got, streams and royalties, we want to make a little bit cheaper, so that our all-in cost, if you imagine the cost of producing 1 pound of zinc, we'll keep it at zinc level, reduces from a eye-wateringly high $1.26 per pound. Bearing in mind zinc price today is $1.32. That's a pretty skinny margin, and that includes all your treatment charges and everything else, down to below $1.10. And if we can do that, then not only have we made the asset more reliable in the short term, but we've strengthened the balance sheet and improved our optionality for equity holders over the long term. By which I mean less money we make is going to go to financing the project, and more money we make nominally is going to be going to the shareholders. Now we want to reinvest that money, of course, to expand the project. So this is why it's been transformational. Teck Resources has come in and said, yeah, we'll put in a lot of equity. We'll do it on a 2-to-1 basis. For every dollar that you raise in the public market, we'll put in $2, up to $40 million. That'll allow you to raise 60. And we'll also provide you a standby facility just in case you need it of $10 million secured against a concentrate. And on Sprott's side, we'd like you to convert a whole bunch of your debt. $27 million they've converted into this deal. So that's that's reduced it by a lot. And we'd like you to take all the royalties and streams from what was essentially a 13.8% gross revenue royalty down to a 5% gross revenue royalty. And so this last 4 months, working with these partners, and so much of business is a partnership, as we all know, we've come together with this great solution. And what Red Cloud, BMO, CIBC, and National are helping with us right now is raise equity in the markets to get between 10 and 15 million US dollars into the company, which Teck will match 2-to-1, which anywhere in that range gets us to the point at which we can finance the project into start. So we feel pretty lucky, actually, that our partners, Sprott, Teck, and our equity holders, and all of you helping us, are working together to that outcome. It's very, very hard, and we don't take any of it for granted. And watch this space, but that's what we're attempting to do.
All right. Now, in terms of getting to production, you're saying early 26 or
Yep.
first half of 26. Can you take us through that
Sure.
that timeline?
Well, technically, the project right now, and we do our weekly review, that's all the board as well as executives, all the way down to the guys building the thing. Every week for an hour. It's called the business plan review. We used to do it at Barrick, and we copy it here. It came from Ford, actually, originally, around Mullally. So I can tell you exactly where the project is right now. We're at 66% complete, and 100% of our procurement's been done. We're on a little bit of a go slow because we're waiting for all the money to turn up, but work is going on site. With the processing plants 74% complete, so we're into that piping and electrics prior to commissioning phase. And the underground, which again, I haven't really spoken much about the underground, there's refurbishment work going on there. We could start mining tomorrow if we wanted to, but we're actually doing the development work to get to our chosen area of mining at the moment. Now we're doing that again on a go slow. Ventilation is in place, power's in place, all the ramps, we've built ramps and various access points are being refurbished as we go along. The area that we had to redesign since we started this is our tailings filter press. That right now is kind of sitting in the yard waiting for the foundations to be built. Again, the team on the ground won't appreciate that simplicity, but that's basically how it feels to me. And that particular facility, we've had to redesign to a form that is far more effective than we originally thought we needed when we did our pre-feasibility study. Often engineering scoping changes change over a project. In this particular case, it did. And so if you went down there and visited the site, you'd see a processing facility more or less there, a gap where the tailings filter press is, and an underground that we could start mining tomorrow with incredibly cheap power, courtesy of everything we get in the Pacific Northwest, which is mainly hydropower, and all the other infrastructure and shenanigans needed for running an operation. So we believe from where we are now, with all contracts signed and procurement done, to getting into a position whereby through this final half of this year, all of those parts of the machine are operating, otherwise known as early commissioning, we can ramp up to full nameplate capacity, which is 1,800 tons a day, through the first quarter of next year. Some of my guys think, well, it would definitely be less ambitious, make it the first half. Mm-hmm. But it's around about that. It always seems to sit on the map fold between Q1 and Q2, if you know what I mean. It's in that space. And the reason we're pretty confident about that, as I said, with all procurement done, all the contractors on site, this is just down to, the exigencies of execution. And so that's why we can be quite precise about the number that we need in terms of money and in terms of time. So we're pretty confident about that timeline.
And lastly, Richard, can you summarize your thoughts, give investors the elevator pitch, if you could, on Bunker Hill Mining, and also I'm curious what investors say to you when you go to various conferences and you tell them about the story, and are they getting it? Are they supportive? Sure. Yeah.
Well, there's one thing before we get. There's one area I'd like to also touch on is the position that Bunker Hill has in the United States right now, and removing opinions on politics and leadership and everything aside, the United States has made a decision that it wants to strengthen its metal supply chain, along with a number of other parts of its industrial architecture. And to that end, we've applied to the United States Export-Import Bank last year for $150 million of low-cost government debt. Low cost is, 3-4% type number over 15 years. And they've given us a letter of intent to provide that for two things. One is to replace our expensive debt. I haven't touched on monetary metal, but things like that with cheaper government debt, so our all-in costs drop further. Then secondly, to allow us to start the engineering and then subsequent construction of a ramp-up plan that we've got at conceptual level to go from 1,800 tons a day to 2,500 tons a day. And the US government is interested in that because, again, like us, like our partners, Teck, Sprott and others, they see huge potential in the Bunker Hill mine. And if we can increase production, we can increase the amount of zinc, lead, silver, and the interesting byproducts, gallium, germanium, indium, cadmium, that we don't get paid for, but will go into the trail smelter, that will help them with their industrial security. So I mention that because the elevator pitch is pretty interesting right now. Very, very rare to find a junior development business in North America that is partnered with a company like Teck Resources. Teck Resources is a very, very accomplished, conservative, professional, senior company. So the first thing investors will say is, how robust is your technical plan? We'll say it has been poured over not just for months, but for years by Teck Resources. So it's in good shape. So the downside risk is pretty small. That includes the geology, that includes everything to do with the mining. So what's the upside? The upside here is within 12 months, we're going to be generating sustainable, positive free cash flow. There are very few development projects that have that opportunity at a time at which most people, and I'm with them, are saying that the commodities that we're going to be producing, zinc, lead, and silver, are moving into a bull market situation, courtesy of all the global competition that's going on. Thirdly, in terms of upside, so that's the sort of cash flow and a potential margin increase just brought on by commodity prices. Secondly is we've got the opportunity with US Export-Import Bank to lower our cost of capital even further, which increases our cash margin. Anything that reduces the price of capital improves the amount of money available to shareholders. So we've got the revenue, we've got our execution, I've told you the plan is good, and we've got our cash flow down there. And what are we going to do with that cash flow? Not in 2026 or 2027, but this year we're going to be starting to allocating money to identify and bring into the mine plan what you referred to as that bonanza grade silver, that galena vein that we're interested in, and more, that will then show the resources becoming larger and richer and more silver content within them over a very short period of time. And our stock price now, we're issuing shares at in this deal at 15 cents with a half warrant over 3 years, exercised at 25 cents. That's a very, very good deal for anyone coming at this market. And they've got Teck standing alongside them on a 2-to-1 basis, and they've got Sprott, who've supported us up to this point, providing them and Teck a little bit more space. And I believe with the team that we've got on the ground, I happen to float around up here in Toronto and Washington and places, most of my time is spent in Washington, D.C., is a team that we've got on the ground. The CEO lives 25 minutes walk from the mine site. And formerly ran the Lumwana copper mine for Barrick in Zambia. So very accomplished people who I believe that the market can trust to do the right thing with the plan and the money that they're provided, and because they've been doing that for as long as I've known them, not just here at Bunker Hill, but before then too. So I think there's quite a lot for an equity investor to be interested in here and to be part of this transformation at Bunker Hill, but its contribution to a much broader mining industry transformation here in Canada and in the United States to, as many politicians say, bring some of our supply chain home. And that's what we want to be doing.
Well, fascinating story, Richard. Thank you very much. Thanks so much for illuminating more on Bunker Hill, and we learned a lot.
Thank you.
And we'll be following. Okay, thanks very much.
Thank you, Red Cloud.
Richard Williams, Executive Chair at Bunker Hill Mining.